Last week I made some important changes to my risk radar. I took the green light off stocks for the first time in months, changing it to a yellow, and the yellow light on bonds to green to reflect the downtrend in yields, the uptrend in treasury prices. So I'm obviously surprised that today's session literally was the opposite. To me, coming out of last week, it looked like the combination of weaker than expected data, a Fed that's not ready to cut, and a big tech rally that was much more purely valuation-based than earnings-based set the trade-off for bonds and stocks more in favor of bonds than stocks. But of course, today, bonds sell off, stocks rally. It's literally like the opposite of the vibes from last week. It's very interesting. I'm kind of surprised. But there's a few key things that really stand out that I think puts a lot of pressure on retail sales tomorrow. That's basically the main event of the week. We don't have a ton of economic data. The Fed speak all sounds a lot like the dot plot, so there's not going to be a lot of volatility there. Look at that massive rally we had in consumer stocks today. This is huge. This candle on XLY, the consumer discretionary ETF, is almost the size of the last three sessions combined and includes a little bit of a gap. So this is a pretty big rally that obviously takes us above a whole section of trading from the late spring. And especially with retail sales tomorrow, it's a curious move. The rally here needs a reason, and the reason could be retail tomorrow. That's where I think we could potentially have some volatility, because if the number comes in good, then it looks like the market's ready to find some confidence again. I've been wondering since NVIDIA's report last month if we would get that everything rally. It did seem like that was the most likely outcome, but it never happened. And that's why I put the yellow light on stocks last week, because it seemed like the clock was really running out, that the time and the window of opportunity to get that everything style rally was running out. Now, I could be wrong. So if tomorrow we see retail sales look really good to offset the drop in consumer sentiment, to offset what we saw in the drop in JOLTS and the rise in jobless claims, a string of bad data. The market wants good data. That much is clear, and that's the narrative that I've been talking about for a couple weeks. It's really important. We hadn't been rallying on bad data because the Fed can't cut. So now we want to see good data. Today's session needs to see some good data, I think, tomorrow, because it was a very different type of rally. Video was actually down on the day. You had a ton of consumer-linked retail stuff working. You had cyclical stuff working, like the regional banks and industrials that firmed up. Those are the charts that were looking really dicey. Now, there are a few catches, though. Number one is for bonds. You want to see a big move in bonds before there's any real change in the trend. I'm not going to be touching my bond light, I don't think, this week unless there's something really, really big, because the 10-year has already kind of cut through the previous lows. That's why last week was important. So the 10-year could really kind of move around in this range below 4.5 and still arguably be in a downtrend. So I don't think there's going to be anything too huge on bonds this week. But the more important one is the equal weight. This is, I think, will tell us if we truly are finally going to get that broad rally, is if the equal weight group, which has been very range bound, can actually trade above this range. So the SPX-EW, not something that you typically do a lot of technical analysis on, but since it's been range bound here, if you can get the equal weight to actually break out and get above the highs from this month so far, then that would tell you that there really is a warming up to the economic situation, and perhaps the week or two of bad data that we got there was an aberration. Market's okay with what the Fed's going to do. I'm surprised by the nature of the rally today, but if retail sales come in really good tomorrow, it would justify this rally, and then we could put the green light back on stocks. Have a good night.